What you just heard was a fantastic segue to about what I'm going to say. I'm Bob Kinsella. I'm an investment banker. We represent companies in the MedTech space. We have professionals across the U.S., West Coast, Midwest, and East Coast, and one of our colleagues sits in Manchester, UK. We only focus in the MedTech space, and up until about the last year, our focus was always M&A, representing buyers and sellers in the space. Some of our buyers were family offices, French family office, US family office, Asian family office. So many of our buyers were platform companies, private equity firms, and some of our buyers were strategic buyers. And we also represent sellers in the space. So in terms of early stage, we don't touch early stage. In fact, what we had was a regular flow of early stage investors sending us information about their companies because we're in the space, we're in the medical space. We go to 14 trade shows a year and see lots and lots of people. And what we finally decided is we had all of these projects coming to us, but weren't touching them because they were growth capital opportunities, and decided to explore some of the growth capital opportunities. But unlike the good doctor, what we decided is we really don't know the technology that these people are talking about. What we do know is we know something about investing, and we know something about risk, and we know something about the FDA. So what we did is screen out anybody who didn't have an FDA clearance, anybody that didn't have a CMS reimbursement from the government for what they were selling, and decided to focus our attention on only those companies that had reached a certain level of revenue, maybe quite modest, as a matter of fact, maybe $2, $3, $4, even $5 million in revenues, but needed to get to the next level, because what we know is that the major medical device companies purchase companies when they reach $20 million in revenues. They don't have to be making any money, but they have to reach $20 million in revenues. Why? Because at that point, those large companies can take those businesses and scale them. They can take a business that may have 40 or 50 salespeople and put it in their sales network of 400 salespeople. They can put significant marketing dollars behind it. They can do lots of things. So what we said is, let's look for those companies that need help to scale, and let's look for money to help them scale. We call it growth capital. This often is the first institutional capital or capital other than angel investors that are family and friends that they may have in their business. What brought me to this conclusion of maybe family investors are an opportunity for us is I was introduced to a company, went to see them in New York, sat down, and they explained to me that they had built their medical device company. Actually, it was a company to deal with osteoarthritis. And I said, well, has the product been approved? No, it hasn't been approved yet. How much money has been invested? $100 million. I said, where did you get investment of $100 million for a company that does not have an FDA approval? We got it from an entrepreneur who had an extraordinary exit and a sick wife. Doctor was talking about emotion, talking about family's involvement. What we found is people will throw money at opportunities for their family or maybe to do benefits for society. We decided we would couple those things. Come to family offices who are interested in doing good, but also were interested in doing well with the investments they make. So that's our focus. We're looking for family offices who are interested in investing in products that have been cleared, products that have been approved, and products that we think have the potential to have an exit to a major medical device company. We're not risk guys. We like to mitigate risk because we don't have the knowledge that the doctor has. What we know is the money and the market opportunities.
Beautiful. Thank you, Robert.